It's finally Friday, last trading day of the week. Welcome back to another recap. Let's get right into it. All right, we're on the 4 hourly. Excuse me. On the NASDAQ. As you can see, there's this potential supply zone up here. Price has yet to tap into it though. And price has kind of just been consolidating, man. It's just been chopping up and down, choppy, choppy, choppy. A little bit choppy price action. Let's look at the Dow real quick. The Dow, much cleaner, reacted off of this demand zone, formed a higher high, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So price has broken structure, is at all-time highs right now. Yes, it is. And yeah, it's at all-time highs. So that's where the Dow is at. All right. So I'm going to skip past a little bit and I'm going to go to about 8 p.m. 8 p.m. right there. All right. So similar outlook on the Dow and the Nasdaq. Let's take a look at the Nasdaq real quick. We could dive a little bit deeper. So price has swept these highs over here, induced it, formed a bearish break right there. Formed the break. There's liquidity up here, the Asian highs and the London highs. Price came down, failed to make a lower low right here. However, it's still potential liquidity target for price, but it failed to make a lower low with the Asian lows. Continued, broke structure, formed a higher high, reacted off of this supply zone, and yeah, that's where price is at right now. Now I'm gonna go down to the 15 minute, and we're just gonna take a look. Okay, what can I see? Price is kind of in between two worlds right now. There's this demand right here. It was a demand zone that formed this higher high, broke this structure, but it's also at a supply zone up in here, which induced this. So this is what we call an inflection zone. So inflection basically just means that price came into this area and buyers and sellers are both kind of fighting for control right now. There's not one clear winner from this area. So at this point, given that we're at an inflection zone, price has been a little bit choppy. It hasn't really been moving too aggressively in either direction. It's been overall trending bullish, but price has kind of slowed down. When you compare it to the Dow, let's look at the Dow. The Dow, clearly bullish. Big bullish moves. There'd be a build-up, an inducement, another bullish move. Much cleaner than the NASDAQ. However, you can still trade the NASDAQ. Just because it's moving bigger doesn't mean it's usually harder to find entries on big moves like this as well. All right. Now let's get into the session. 8:45. I'm going to go skip on. Okay. 9:30 right there. What can I see? There was liquidity right here. A trend line with in accordance to the Asian lows and the London lows. All right. So that got swept. So I'm going to go down to the 1 minute. That got swept right here. So as you can see, these lows got swept with this candle. So I'm just have that marked out. Potential inducement. Okay. Let's take a look at the NASDAQ. What's the NASDAQ doing? So I can see what? Price, the market opened. It reached this level of supply. And it's reacting bearish. So I'm going to play a couple of candles. It reacted bearish off of that supply zone. Broke structure up here. Price is moving bearish. That's what I can see. Even though we're in a potential demand zone, it's moving bearish. There's no bullish signs, so I will not be buying yet. The whole session, I was just waiting. I was waiting to see if the NASDAQ was going to potentially give any bullish intent, but I was not going to jump the gun. I was going to stay patient. Same with the Dow, because the Dow was extremely bullish. It broke structure right up in here, and I was not looking to jump the gun for this either. I wasn't looking to enter shorts just because we're at a higher high. I needed to wait for the proper confirmations. So my first trade of the day took place on the Dow. That's where I focused on today. I had this demand zone marked out, which led to this break, which swept the Asian lows and the London lows. And yeah, that was my first trade of the day right here. However, one caveat I want to present is look at the overall higher time frame. Price made a massive bullish move. It hasn't really retraced. It's a Friday, so price usually retraces a bit. Price, like, it's not a good trade for me to be taking. That's all I'm gonna say. Even though it did sweep this liquidity, it's a valid trade, but it's not the best. So the main reason I was even compelled to take this trade was because of this right up in here. The London highs formed equal highs with this wick right here. Equal highs, area of liquidity, and given this, I wanted to look for buys to sweep this for 3R. That's what I was looking to catch. Let's see what price does. Plays a little bit. Okay, right here, what can I see? Price came up in here, failed to make a higher high, made a lower low right here. Price is starting to trend bearish. Starting to trend bearish. There was this supply zone price reacted from. Okay. So given all this, I was like, I was a little bit hesitant on this trade. I'll be honest. I should have avoided this trade. I would have been better off avoiding this trade. But, it is what it is. I took it. Not the best trade setup I could have taken. So let's see what price does. Get a couple of candles. Boom, big bearish candle. Stop loss. First trade of the day was a loss right here. However, I was able to identify what? Price broke structure down here. I'm going to clean it up a little bit. So I'm going to get rid of that. I'm going to just leave the first trade. So price broke structure right here. Price broke structure. And price is at a higher high. Price has broken structure on the higher time frame. It's at all-time highs. I was looking for a retracement, but the one thing that was giving me some doubts were these equal highs up here. However, why did I still look for shorts? Because when price makes a retracement, it's just seeking lower prices in order to continue in the pro trend. So the pro trend is clearly bullish. Price is looking to retrace, come to the discounted levels, buy at lower prices so we could continue higher. So if there's some liquidity left behind, there's no problem because price is leaving it. Price is leaving it so later on, when it continues higher, it's a point that will fuel price to higher prices. It serves as fuel that they're just leaving behind. So given that, I understood that these equal highs did not have to get taken out today. All right, so I'm gonna play the market out a little bit more. Let's look at the NASDAQ real quick because I took my first loss. My bad. Okay, the demand zone got absolutely swept. Prices looking like, okay, this was a SMC trap clearly. Price came in, gave a little reaction, continued bearish. Price is looking like it's going to respect the supply up here. So I'm not looking to trade this. It's not really, I'm going to just focus on the Dow. I already took one trade on the day, and I'm going to see if I could catch shorts on this retracement. So that was my focus at this point. So let's play the price out a little bit more. Boom. Clearly, what can I see? There was a supply zone up in here, which was also a decisional zone. Why? Because it was the last area, the last zone left before the bearish breaker structure down here. So that's what we call a decisional zone. And I had my entry right here. Now, I waited a little bit longer before placing my limit. So I'll tell you when exactly I placed it. Okay. So once I saw this right here, that's when I placed my entry. Why? Why did I take the trade from up here instead of this area right here? First off, this was the decisional. This was the last zone before the break. Second, I saw this as a buildup that was going to be fuel for the market to continue lower. A liquidity sweep. Just liquidity that the market was leaving behind. My entry it included the imbalance right there. And I left a couple of ticks above. And I'm going to play out the market a little bit more. And I want to show you guys something. So I targeted about 3 point right there. So that was my trade setup right there. Price was coming down. And this was my trade. I want you guys to see something. Let's observe. What did price do? Price just missed my entry. Price formed equal highs right here. And price gave a bearish candle. Now, you cannot panic when you don't get tapped in and price gives 1 or 2 candles, especially if it creates equal highs right here. I did not panic. I kept this trade entry. I did not chase the markets. I'm like, okay, If price wants to continue all the way down here without tapping me in, it's okay. You know why? Because I'm confident in my edge. I'm confident that I had the right entry. I included the imbalance. I had the liquidity sweep. If I don't get tapped in, it's all right. That happens sometimes. There's nothing I could do about it, and I'm not going to chase the markets because that's going to lead to many losses, many blown accounts, and just stress over time. So let's play it through. Let's see what happens. Boom, we get tapped in, 1043. This is my second trade, and let's see what happens. What do we get? A little bit of a consolidation. Boom, boom. Just bearish candles. Quick and easy. Nice and easy. 3R from a decisional zone. We caught the retracement. Price continued bearish for the day. Given the day hasn't ended yet, but let's see. Price just continued bearish. All right. One more thing I want to talk to you guys about. My rules is 3R, correct? If I wanted to, I could have taken partials here and held it for longer, but I didn't need to today. I hit the profit target. I was content with the profits. That's it. I closed full volume at 3R. Look how much more price moves. I just want to show you guys something. It's a little psychology lesson as well. You know what? Let me just get out of replay mode. Boom. Look how much. Price is still continuing bearish. So look, I could have caught, what, an 11R, 11.5 RR. Am I going to sit here and wish that I held for longer? No, because I have rules for a reason. I'm not optimizing my strategy just for this one trade for this one day. It's for a series of trades. Price isn't going to go to 11R every time. If I chose to hold the trade for this long, my strike rate would be way lower. I would have way more stress because I'm holding the trade. Price might come back and stop me out. I might see 8, 9R floating. My target's at 11R. And price just stops me out at break even. See, when you do things like that, it really stresses you out, which is why I'm stressing the importance of 3R. Like, I knew about 3R way before. Like, at least take partials at 3R. I knew about it. However, I didn't implement it because I got greedy. And I got burned so many times. And I went through so much, like, emotional pain from, like, having price go in your favor and then stop you out with these high RR trades that I understood that I needed to find a balance and I needed to find structure and consistency, which 3RR gave me. It gave me confidence. I'm not here stressing over where I should take profits. Because worst case, if price hits 3R and I hold it for longer, I have 50% partials. I have 1.5R banked in. So even if it hits stop loss, I made profit. So there's no issue with that. All right, guys. So summary for today. I took one buy right here. Not really a good trade. I gave it a B because I followed my, I gave it a B because it wasn't the best trade setup I could take, but it also wasn't complete bogus. It was, the second trade was an A. It was a good setup. I understood the risk given the equal highs up here. I understood price could have potentially stopped me out and taken this out, but I accepted the risk and I took the trade regardless, given the other confluences we had. So that's the trade recap for today. Minus 1R here, plus 3.25R-ish over there, plus 2.25R for the day. We're done for the week. I'll see you guys on Monday. Peace.